Hey everyone, how's it going? It's Saturday morning. Go over this with you, and what can I say but a chart tells 1,000 words in this case. Picture perfect. Your 410 is your highest open interest on your calls. Highest open interest on your puts is 400. Meet in the middle. 405, it should expire. Basic, you know, 404.30, it expires. So it hasn't hit the exact Max Payne open interest strike in a while, and there you go. Coming down to my commentary for the week. So on Tuesday, this is all going to be before the market opens. So on Tuesday, just warning people, invite it's coming out soon. So just careful on any risk trades on that. And then if you are, I just want to remind people, get a lot of questions on the weeklies. They trade really fast, so you have to let the open interest build up to around Tuesday or Wednesday before a high probability trade um, comes true. So because always remember, the higher the open interest is, the more power, the more weight these carry. The lower it is, it's just a little speed bump. It can run right over it. It carries no power. And so Sunday evening, going into Monday's trading, your highest open interest was 390, and your highest open interest on your calls was 410. Just happened to be a coincidence they're the same. But they're only down here, like at 3,000 open interests each. So that's nothing. You're not going to want to make a trade on that. You need to let the market build up, and that's why I've always said or have seen Monday, Tuesday, Apple's allowed to run as high as it wants to, whatever, and then come Wednesday it'll kind of settle out, and then Thursday, Friday it gets checked and put in its place, and then you can make a decision. Let the options market tell you what's going to happen, and then take advantage of it. Don't try and front run it. So let's kind of see what happened there. And that's what I get at, a ton of questions like, will these open interest strikes change? Yes, they are, but you have to let them build up where they're not going to change anymore or account for it. And on a weekly, that's why I say, don't trade these unless you trade for a living basically or by the computer 24/7, because you don't have much time to take advantage of the stuff, because you're going to have to let it build up to Wednesday sometimes, and then you only have 2 days to trade. And that's the way weeklies go if you want to do high probability without, throwing a dart out there. So on Monday, this is a 5-day chart broken down into days. The dark blue is the daytime trading. And so you open up at 395 here, and Apple runs up on Monday. It runs up on Tuesday to a high of 322. And then, so all day, we're trading 322. And then stock starts to come down and really came down. So let's see what open interest looked like going into Wednesday's trading. And I have a chart here. So this is what going into Wednesday's trading Tuesday evening looked like, or Wednesday pre-market. You had your 420 was your highest open interest on your calls, and your 390 was still your highest open interest on your puts. Whenever you see that build, whenever you see the open interest stay on the same strike, there's a ton of strength there. So you have very high probability trade right there if you're going to sell a put on that side. So whenever it builds and then stays the same, that's good. Whenever it changes like this, it's kind of wish-washy, but you're going to want to go with the highest open interest, obviously. And so 420 after Tuesday's trading became our highest open interest. And then let's look what happened after that. Go right here. And so Wednesday's trading, what do we open up at? 420. 420 is our high, and it just cannot gather strength anymore. And let's see, I wonder why. Oh, maybe this, maybe not. And down she goes. And then too, here we stopped on Thursday at this one thing right at 400, but dips a little below it, 396 real quick, basically right about 400 it hovers. And so now Thursday, Friday, what's our highest open interest? These closed down, once Apple couldn't get above that 420, these closed down, I'm sure helping the stock come down this way. 410 became your new highest open interest. 400 calls when it got down here. This was your highest open interest. I mean puts. When it got down here, guess what happened? Came back on the other side of it. I wonder why, and finished right in the middle. So that's basically how I would trade it. Is your highest open interest was down here. Let it build up. It builds up. You sell. It's up to you. Here's the probability ranges. So I would go. This is just going one strike off. So if I ever have, here's your highest open interest, one strike off would be 98% probability. So anyways, when the open interest built up, so on Wednesday, and then you saw the stock coming down, go ahead and sell this 425 strike, or 420 if you like, and let the stock go down. This changes to 410, doesn't matter to you. You still sold this, and it expires, and you just became commercial money and profited with them. I put this act like this was still the highest open interest for just what I explained. If you sold this earlier in the week, don't try and be a hero. Don't come up and sell this just because this is the highest open interest now. Just leave it and call it a good trade. And I didn't want to put another arrow, but same thing. If you sold this 420 strike or 425 or anything, don't come and roll it down here. Just leave it, just because there's so much volatility. And remember, if you ever see a big, huge range like this, 390 and 425, and say, oh man, that's awesome that there's a $35 range. Well, you need it. When there's high volatility, you're going to need huge ranges. You may not like it, but that's what it is. Look at just what happened this week. Went all the way from 422 down to 400 real quick. And so you need these ranges. When the market is not volatile, you'll only have a small range. When it's volatile, you'll have a large range. There's really not too much else. Oh, here's a little tell. I'm not going to, I should have took a screenshot. Remember last week I was saying how when your open interest is down here. Here's your puts and here's your call open interest. And so when the volume on that strike, whatever your highest open interest is, when the volume starts to double it, if get into triple, definitely, then the strength, then more than likely these are closing down, and the strength for it to go over becomes more apparent that it can. Well, you had, and normally your highest volume will match up with your highest open interest. Not this week on the weekly, and again, this is probably not going to make any sense and confuse people because we're not even looking at the right data. But your 410 was your highest open interest. Here, I'll come over to call side. 410 was your highest open interest on Friday, but you had the 405s as your highest volume for the day, way above your 410s. Come over here to the puts. Your 390 was your highest open interest, or no, I'm sorry, 400 was your highest open interest for your puts, but you had the 405s again trade as your highest volume. So you knew right there, Apple's not coming off 405, it's going to close right there. So when it's not trading off that, when all the volume isn't on the highest open interest, you know it's going to stick there and it's not going to go over these. So maybe this will make it a little clear. Here was your highest open interest, 400, 410, but all the volume on the calls was trading 405. The highest open interest volume was. Same thing with the puts. The highest volume was trading 405 puts. So you knew it wasn't coming off that. That's another little tell of the market. And other than that, I wanted to go over real quick with you too. So the way I do it is open interest max pain. I'm using max pain just as a general term. Option pain, all synonymous pretty much with me. Open interest is so much more superior as far as trading goes. This is the original max pain calculator, which goes off, or not the original calculator, optionpain.com is, but this is based off of dollar value, which they all do it. And even though this is for the October, this was the same option